Stacking in my bag. Yeah, stacking in my bag. I like crypto grind. Currency's flowing, every coin's on my mind. My coin based the upper, watch the numbers climb. In this damn fine, feeling so prime. Hustling these protocols, known to the man. Emptying out my radar, I can't understand. Jumping on the wave, watch me move the plan. Holding diamond hands in this crypto land. Got my eyes on the prize, making moves like a king. Every transaction here, cash raises ring. Ride a blockchain, we won't never be slow. In the world of finance, that's the profit.
If you're holding real world assets, utility assets, you are a bank.
Yeah, of course, we go over the news and stuff, but we just do it feels natural when we be doing our thing.
We gotta get this money on. Yo, what it do?
Yeah. Oh yeah.
What's good? Hey, D, you might wanna update your name. Say Kween. Oh, we good. What up, everybody? We back. Happy Tuesday. What up, y'all? So yeah, we got a couple updates to go over today. So y'all already know what time it is. Let's run the likes up. Let's run them likes up. They said Queen D. But yeah, y'all, let's run them likes up. Y'all already know, hit that like button on the way in over here on YouTube. Make sure you hit the like button if you forgot. Make sure you hit that for us. We got a couple articles and stuff to go over today. We're gonna check out some prices and stuff. But right now it look like, see what's going on. XRP's at 220. Is this on CoinGecko? 228. Thought I saw 234.
Yeah, it came back down. Came back down.
Okay. I know Sui was also running. Sui's at $1.85. It went to like $1.90 something. So you got a couple coins trying to run. Let's see. XLM still at 23 cents. Where's Bitcoin? Bitcoin's at 92,472. Ether's at 3250. Chainlink's at 1380. Cardano's at 41 cents. Let's see. Hedera is at 12 cents. Okay. So yeah, just trying to keep an eye on the market because I don't know. This is weird. It's just weird. It's just weird.
Yeah.
Because we gotta watch these geopolitics and see how stuff plays out, y'all. So we'll keep an eye on the charts and stuff on the assets throughout the live. So but yeah, y'all let us know in the chat if y'all see any type of price appreciation or whatever. But yeah, we're gonna talk about Block and PayPal. They say scams are now an industry. So they're calling scams a whole industry. So yeah, we're gonna talk about that. We're gonna talk about, is Venezuela hiding a 600K Bitcoin reserve? So we're gonna talk about that as well. And then we're gonna talk about Ethereum price predictions. So Vitalik warns that ETH isn't ready yet. I'm sorry. Is this from yesterday? This is from yesterday. Sorry. Went over that yesterday. But yeah, we're going to talk about the former OCC chief says that bank charters help keep crypto compliant. We're going to talk about that. Let's see. We got another article on Amazon. So Amazon. Yeah, well, it's not really, I ain't going to go too far into it, but Amazon is going, basically they got a lawsuit for price gouging. So I thought that was interesting. Yeah, they price.
They are. They do.
They definitely do. I don't know how they're gonna get out of this one unless they're gonna pay the judge off. But so Amazon is going to court. And then we got XRP rockets 11% to nearly 240 as Ripple linked ETFs see highest trading volumes. The trading volumes with the ETFs are insane with XRP. Like if this was Bitcoin, we wouldn't hear the end of it. If Bitcoin was doing what XRP is doing, we wouldn't be hearing the end of it right now. It would be all over the news. It would be everywhere, gang. Like this is very, very telling. It's telling you everything you need to know. And then we got Morgan Stanley files for Bitcoin and Solana ETF products. So we're gonna talk about that. And then we're gonna talk about Bitcoin facing a liquidity drain, danger zone as Japan's 30-year yield breaks a historic record. And then I am going to show a tweet from Zebec. I'm gonna show a tweet from Zebec. So we're gonna go ahead and get started. I'm actually just start off with that tweet from Zebec because I actually meant to show this yesterday.
Okay.
I got to pull it up, but yeah, they are starting their countdown to their super app. So they said the countdown is on. So I thought this was pretty bullish, being that Zebec is on the payroll side of payments. And I think this is going to be phenomenal. I think this is going to set them apart. So they have the ISO compliance. Everything that they need, they have now. So this is definitely going to be a plus for Zebec. So we're gonna keep an eye on this. They didn't give no timeline, but they did say the countdown is on. So y'all better be paying attention to Zebec if you're not already. Make sure you're paying attention.
Wow. The countdown is on.
Man,
Shout out to Zebec.
On.
Damn.
No, for sure. So Bitcoin, let's talk about Bitcoin facing a liquidity drain, danger zone as Japan's 30-year yield breaks a historic record.
Yeah, I saw this and I was like, what this is about? So when I started reading it, I was just like, all right, cool. So basically what happened was Japan's 30-year bond yield is about 3%. So it's a level not seen in decades for Japan. So this level has not been seen in decades. The BOJ, the Bank of Japan, raised short-term policy rates now 0.75% and is shrinking its monetary support, right? So that reduces the global supply of very cheap funding that many leverage trades depended on. So when those funding sources tighten, traders unwind leverage position and sell assets. And this could hit Bitcoin hard because it's liquid and widely used in leverage trading. Super duper. So there are three broad ways that this can affect Bitcoin. So through the yen funding and carry trade unwinding, through a higher global term premium, which raises the price of risk, and through fiscal trust worries that could later push some investors to Bitcoin as an alternative. So how these channels work is the yen funding and the carry trade unwind. So imagine traders borrowed cheap yen to buy things that pay more elsewhere. So if Japanese yields rise and the yen strengthens, these borrowed yens can become expensive to hold. So traders then sell what they bought to cut their losses. So that selling can hit many markets at once, including Bitcoin. Because crypto markets allow high leverage and 24/7 trading, this selling shows up very quickly. And number two, term pricing, term premium, and global price of risk. So when long-term bond yield rise, investors demand more return to hold long-term risk, and this raises discount rates used to value risky assets. So for the long duration and high growth speculative assets such as Bitcoin, higher discount rates are a headwind. Prices can fall or find it harder to rally. And then they talk about the fiscal trust channel. So if long yields spike because people worry about government finances, some investors may lose faith in sovereign debt and seek alternatives like Bitcoin. So that's slower. The narrative is driven effective. So this would drive it up. So the three scenarios that this article lays out is the calm grind. So the yields rise slowly and the BOJ communicates clearly, and then the markets absorb the change. The effect on Bitcoin would be, it's not catastrophic, but the growth is harder. But the messy spike, that's another scenario, which would mean the danger zone. So the yields jump quickly, then the yen rallies, and then carry trades unwind fast. And then Bitcoin would see the sharp sell-offs. And then number three, the Bank of Japan flinches. So the BOJ slows normalization and or signals support to calm the markets down. And the effect on Bitcoin is rapid relief rally, or at least a downside pressure as liquidity returns and leverage stabilizes. So those are all the different scenarios. So what it could mean for Bitcoin's prices in the short term: higher risk, volatility likely increases for months and years to come. If the higher yields become permanent, Bitcoin's discounted value may be pressured. And if fiscal worries, then it becomes a major concern. And then some investors might see Bitcoin as an alternative. And the net effect depends on the force that dominates. So liquidity versus fiscal trust flows into alternatives positive. So basically what I got here was that these global markets are like building, you know, the supported big pillars of cheap cash. So Japan stepping away from cheap cash shakes one of these pillars. So that can make the building, you know, sell off faster, right? So if it wobbles or turns long-term doubts about government finances, it could eventually push some of these people toward alternatives like Bitcoin, or it could drive it down. So we're just gonna have to see what happens. We just have to see where it happens. So for now, immediate risk is liquidity de-risking that could take Bitcoin down quickly, but the possible longer effect is more mixed. So watch the yields.
Oh,
Watch the yield.
Yeah, this article is interesting.
Yeah.
That was an interesting one. What?
Yeah, man. It's crazy. It's crazy. So, you know, I mean, we'll see what happens.
I mean, listen, they've been telling y'all, you know what I'm saying, pay attention to Japan. I know some people just don't like Jake for whatever reason. But listen, you got to pay attention to Japan, because that Japan shift it say it right here in the article, the Japan shift that matters for crypto. It's gonna affect crypto, so you might want to be paying attention. This was an interesting article, though. We're gonna have to keep this one in the tuck.
Yeah.
We're gonna have to keep this one in the tuck.
I'm with that. I'm with that.
Wow.
Yeah.
They said some bold shit in this article.
I said a whole lot of
like a lot of stuff that they said some controversial shit. Some people would highly disagree.
Yeah. I mean, they can disagree all they want. You know what I'm saying? But it's right here.
Wow. Okay. 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 So let's talk about Block and PayPal. So they say scams are now in industry. I thought that was interesting. Because they are like they're saying a lot of the reason, like, of course they're gonna say they want to move money faster and make things more convenient. But the real reason behind a lot of these upgrades is, we want to move the money faster, of course, but the scams, the scamming, the fraud is a very big reason why they want to do this. While we're making this transition when it comes to payments. So
right.
So scams have evolved into a structured, fast-moving industry that's significantly more sophisticated than simple phishing or naive user errors. So according to risk leaders from Block and PayPal, fraud isn't limited to clumsy spam anymore. It's a social engineering-driven ecosystem that exploits digital platforms, urgency psychology, and AI-amplified tactics to target users of all age groups and experience levels. So some key points here is that scammers now operate across social feeds, direct messages, and online marketplaces, leveraging trust built outside financial platforms before a transaction is ever initiated. So this tells me that TikTok know what the fuck is going on, and they're not doing anything about it because they're telling on themselves. Because if you're a TikTok creator on here, who does TikTok use for payouts? D? Who do we have to link? We have to link PayPal.
Yep.
So TikTok knows exactly this. This is exactly why a lot, not just me, but collectively, creators need to take them to court.
Mm-hmm.
They need to take them to court because they have put us in very, very vulnerable positions, in dangerous positions where I have to watch over my shoulder because I don't know if a person got scammed from a fake page. You know what I'm saying? They might see me and be like, "Oh, I'm about to get her because she got $500 off me."
Yeah.
And thinking that it was me the whole time, it was a fake page. And TikTok is just like, so that tells me that TikTok knows exactly what's going on. They just told on themselves, like, indirectly, because they work with PayPal.
Mm-hmm.
So, So this is like a main reason why TikTok needs to be taken to court. Literally. If we didn't build our platform off TikTok, I would not be on this app. I do not like TikTok. I'm gonna just be honest with you. But nearly one, as far as like being a creator, because they just be fucking shit up.
And
but,
now that it's with the shits with America, it's definitely difficult to do a lot of different things that we could get off before. So yeah, it's crazy.
Exactly. So nearly 1 in 5 U.S. adults have experienced a scam in the last 5 years, and many victims lose confidence in digital finance afterward. AI tools such as voice cloning voice cloning, they definitely have did that with me.
Mm-hmm.
Voice cloning and convincingly realistic messages are making scam tactics more potent. So platforms like Block and PayPal are experimenting with smart friction, which is contextual. It has contextual risk warnings and trust signals to pause suspicious transactions without legitimate ones. So let's see. So what it likely means. So a shift from isolated attacks to organized fraud networks. So scams are no longer random or opportunistic. They resemble an organized ecosystem enabled by modern digital infrastructure and amplified by artificial intelligence, which is making scams both more realistic and more scalable. So trust is now a core financial infrastructure issue. Because scams don't just steal money, they erode user confidence. Platforms must invest in active interception and user trust recovery mechanisms. So victims are not just losing dollars, they're more likely to question their financial providers, withdraw from digital payment use, and switch institutions altogether if they feel unprotected. Also, defense needs to be proactive and contextual. So standard security measures like static warnings or basic filters aren't effective against dynamic AI-driven scams. Instead, companies are embedding real-time risk assessments and machine learning models to interrupt fraudulent flows just before they complete. So, Block, for example, displays warnings on 1% of at-risk transactions based on contextual signals in the absence of trust data. So why this matters and what's the big picture here? So fraud has become a structural market risk. So payments and digital finance platforms are no longer tasked only with processing money. They're also guardians of trust and user interaction. So a rise in organized scam activity challenges the underlying assumption that digital finance is safe and frictionless. So AI is a double-edged sword. Artificial intelligence is enabling both the attackers and defenders. So scammers use AI to craft convincing impersonations and some psychologically manipulative narratives at scale. Defenders use AI for real-time risk detection and smart friction interventions. So user behavior and platform design must evolve together. So the shift from email scams to social engineering via social platforms and instant messaging means the financial platforms must integrate behavioral and contextual risk signals into their payment flows. So traditional security checks like static KYC checks or periodic fraud scans aren't enough in a world where trust is formed outside the payment app before a scam is executed. So the bottom line here is that scams are no longer fringe exploits. They're a digital industry driven by organized tactics and supercharged by AI and social channels. So the consequence goes beyond stolen funds. It undermines trust in digital finance, and companies are now building smarter risk-based interventions to protect users without blocking legitimate activity. I'm glad they are. I'm glad this is happening. I'm sorry.
I mean, it's
I'm
about
sorry. So
time.
I just yeah, but I just wanted to share that with y'all so that y'all know to be careful
Yeah.
and do not answer DMs, messages, even if it's outside of us, because they're scamming with a lot of creators. So just be careful. If it sounds too good to be true, it is. If they saying they can flip 500 to 1,000, don't believe them. It's a scam. You know what I'm saying? They're telling you to send your seed phrases or send them money, or you got to transfer. They want some USDC or some USDT, or they trying to tell you to send some Bitcoin. It's a scam. If you have to send anything, it's a scam. Like, we don't need anybody to do anything for you. So everyone just be careful. Seriously, be careful. But I'm glad that they taking these steps because it's needed. I ain't gonna lie.
Absolutely. And just like Daniel said, we will never ask you to send your crypto to us. Be safe. Me and Kween, will never ask you to send us crypto. Be aware of scammers.
Exactly.
Yes.
Thank you, Daniel. Thank you so much, Daniel, for putting
Right.
that in the chat. 100%. So yeah, so we're gonna go to this next article. So let's talk about this Morgan Stanley one you sent. So Morgan Stanley files for Bitcoin and Solana ETF products. So I thought that was interesting. I'm like, okay, Morgan Stanley, now you filing for a Bitcoin ETF. Why you didn't do this in 2025?
Yeah.
But hey, better late than never.
Nah, Morgan. Well, I guess Morgan Stanley, they was one of the ones that had to, they had to wait. They had to wait and let the dust settle. You know what I'm saying? So basically, Morgan Stanley has filed with the U.S. SEC to launch a new exchange-traded fund tied to Bitcoin and Solana. So if approved, this will mark another clear step by a major Wall Street bank to digital assets, right? The filings show that the banks want to give investors regulated exposure to two leading assets at a time as a renewed institutional interest. And then Morgan Stanley's filing outlines plans for a Solana ETF designed to track the price of Solana. So the fund will follow the set price and benchmark with adjustments made for operating costs and other obligations. So according to the documents, the trust will not only hold the tokens directly, but it will rely on the approved third-party custodian to safeguard the assets. And then the Solana product also includes staking. So Morgan Stanley stated that the fund plans to stake SOL through outside service providers. So this fund is going to actually be tied to staking, so you'll earn rewards. So any reward earned from this process are expected to be added to the fund's net asset value. So this is actually a good ETF, right? If it's got staking attached to it. Not financial advice though. This approach allows investors to gain exposure to Solana and potentially staking income without managing wallets or private keys. Similarly, Morgan Stanley submitted a separate filing for a spot Bitcoin ETF, and the Bitcoin fund seeks to track the price of the cryptocurrency itself, following the same general structure already used by other approved products in the U.S. market. So with this move, the bank joins several different large firms for investor attention in the growing crypto ETF space. Morgan Stanley plans to introduce crypto trading on E-Trade in 2026. So this year, that's why a lot of this shit got to get going now. Just like what Ash was saying yesterday, you can't fuck around no more, right? 2026 is the year, fam. The move is expected to give everyday investors easier access to digital assets. I mean, if you really want to keep it 100, all you got to do is go sign up for Robinhood or Coinbase and get the asset yourself, fam. That's the easiest access to that asset, but I digress, whatever. And then Morgan Stanley joins a broader shift in crypto. More recently, the U.S. banking regulators allow banks to act as intermediaries in crypto transactions and earlier restrictions. In related development, the OCC, remember we talked about, has granted the conditional approval for a national trust bank to Ripple and other major crypto firms. Meanwhile, Reuters reported that Morgan Stanley's move shows strong demand from investors who prefer exposure through ETFs rather than direct ownership. So I guess, this will work for people that normally get ETFs, tied to stocks and everything. This will do the same for them with crypto. So I guess this is safer for them. But the easiest way is to self-custody, fam. Just get a Robinhood account. Just watch, get inside the Telegram. The easiest way to get inside, not the Telegram, the Patreon. My bad. We don't have the Telegram anymore. The Patreon. If you get inside the Patreon, we have all the answers right inside the Patreon. All the answers is there.
Literally.
All the answers is there. You know what I'm saying? We make it very easy, very simple for you. So other firms like T. Rowe Price have also filed for crypto-related products as institutional interest grows. And then asset managers like Bitwise have filed for ETFs, like we talked the other day, for Tron and Zcash and 9 other cryptocurrencies. So more importantly, for Morgan Stanley, the Bitcoin and Solana ETF filings signal a steady push to remain relevant as digital assets become part of mainstream investing. Crypto is not just put to the side no more. It's in the same ranks and same regard as stocks now, or going to be, rather.
Man.
Yeah. So Morgan Stanley,
about that time.
Better late than never.
Better late than never, gang. But they knew they had to get on board, though.
Mm-hmm.
They knew they had to get on board. Okay. So we'll see how that works out for them. But shout out to Morgan Stanley, because I know they got a lot of money over there.
Oh yeah. They sure do. Shout out to Daniel with the super chat. That's facts. I called my mom last week and I told her I don't care if my life is in danger. I told her I would never call her asking for crypto. Yeah, that shit crazy, exactly. Fam. That shit crazy. They be scamming crazy, fam. So, yeah.
No, the scamming is out of control. So everybody be careful. So we got another article about Venezuela. So are they hiding a 600K Bitcoin reserve? So because analysts remain unsure. So let's talk about it, because I know some articles been coming out saying we gonna take their Bitcoin or something. Yeah. I don't know what's up with that. Yeah. So let's talk about it real quick, because Venezuela apparently got they're hiding a 600K Bitcoin reserve. So let's see. So Cointelegraph reports that rumors are circulating about Venezuela possibly holding an undeclared Bitcoin shadow reserve worth up to around $60 billion, which is roughly 600,000 BTC. So this speculation has resurfaced after the U.S. capture of the Venezuelan president. So the $60 billion figure is speculative and is not backed by on-chain evidence from blockchain trackers. So the estimate comes from a theory that Venezuela may have accumulated this stash by converting gold sales and other assets into Bitcoin over several years. So publicly known data shows that Venezuela's official holdings at just 240 BTC worth near to $22 million. So a tiny verified balance compared to the rumor. So analysts and intelligence sources have not confirmed the existence of such a large stash, and major blockchain intelligence firms have not verified these claims. So this creates a wide gap between official verifiable data and speculative narratives circulating in media and on social platforms. I just think it's interesting that they were possibly holding Bitcoin in a shadow reserve, and they were able to do this by they accumulated this stash by converting gold sales and other assets into Bitcoin over several years. That's interesting.
Yeah.
That just shows you how sneaky they. Because if this is true, this comes out to be true, that's sneaky as hell. What the hell? Like, and I know they got mad gold over there, because I didn't know until this Venezuela situation happened that Venezuela has more gold in Africa. So was it South Africa? They got a lot of fucking gold. That's all I know. I didn't know that they had. I knew they had some. I just didn't know they had that much. So I slept on their minerals because I thought they just had oil over there. But yeah, that's interesting though how sneaky Venezuela was being if this comes out to be true.
Listen, a lot of these countries corrupt as shit. Man. Like
all of them.
Yeah.
Probably pretty much all of them. Yeah, for sure.
Corrupt as hell, man.
Because talking about they publicly known data is only worth 22 million compared to freaking 60 billion. That's crazy. But yeah, so analysts and intelligence sources have not confirmed the existence of such a large stash, and major blockchain intelligence firms have not verified these claims. So please keep that in mind. That's why I wanted to make sure we reiterate that it's not confirmed yet. But this creates a wide gap between official and verifiable data and speculative narratives circulating in media and on social platforms. So what it likely means, so rumors versus on-chain reality. So the core takeaway is that there's no blockchain proof of a 600,000 BTC Venezuelan stash. The high number comes from mathematical estimates tied to gold sales and hypothetical conversions, not observable wallet activity. So this matters because Bitcoin's transparency normally allows for verification, and no wallets on major public trackers correspond to such large government holdings. So at this stage, the story is a rumor or theory, not a verified fact. So analysts caution that extraordinary claims require extraordinary evidence before markets should take them at face value. So if it is true, and we done took over Venezuela, we taking that shit. If it is true, if this is not a theory and it is indeed a verified fact, America is taking all 60 billion of y'all Bitcoin. We probably ain't gonna leave you a crumb. We ain't leaving y'all nothing. We ain't gonna leave you half a Bitcoin. We gonna take Trump taking all that shit.
And that's crazy because that's all we do. That's how we get Bitcoin. We just seize it.
Yeah, y'all know we just bullies. We just go take everything from everybody else. We just seize everything. So we're gonna seize that, and we're gonna take that off y'all hands. We're gonna take it off y'all hands. Y'all ain't got to worry about it if it is true. And that's probably why they're not trying to verify it, because they don't want y'all to know that we stealing that shit. We finna take it. That's why they ain't trying to verify it. That's probably, you know what I'm saying? And this probably was the plan the whole time. That's why they sat there and watched Venezuela, because if it's true that over several years they were using their gold, what did they say? Converting gold sales and other assets into Bitcoin over several years. That means we was watching their ass do it. It was like, okay, so when it's time to go over there and take that shit, we ain't even got to tell y'all we stole it. Because y'all ain't got no blockchain, no proof on the blockchain to prove it, that y'all even had that. So that was right up our alley game. This was, what a finesse.
Nice.
It's fucked up. Oh, it's fucked up for sure, Schways. You're right. It's fucked up. But this was right up America's alley. This is what they do, gang.
Yeah. This is all they do.
This is what they do. This shit's crazy. Yeah, this is crazy.
They don't care.
Crazy.
They don't care. They don't care.
Yep. Like Jay Bill said, been the plan the entire time. Exactly. And we're gonna cease that, and that's how we're gonna start our Bitcoin reserve over here. That's because we said we wasn't gonna buy it. We wasn't gonna use taxpayer money to purchase Bitcoin. So instead, we're gonna go to Venezuela and we're gonna take their 600,000 BTC, and that's how we're gonna start our own goddamn reserve. That shit is a finesse. This shit is crazy.
Bully ball.
That shit is crazy. I actually believe I believe the theory. I think it's a fact, but right now they're saying it's a rumor. It's not a verified fact, so we'll just run with that because I don't want to spread misinformation and give y'all anything to talk about. So why the rumor emerged now? So the rumor has gained traction because of two coincident factors. So the capture of Maduro by U.S. forces, which made headlines and brought scrutiny to Venezuelan state assets, and then the long-standing narrative that Venezuela used alternative settlement mechanisms like gold and crypto to bypass sanctions. So while these events fuel speculation without on-chain verification, the BTC stash remains unproven. And that's exactly what they want. So why this matters in the bigger picture. So market psychology and supply expectations. So even unverified, such a narrative can influence market psychology. So traders may react to the idea of a massive potential Bitcoin reserve being seized or frozen despite a lack of proof. So this can move prices or sentiment before facts catch up. And then transparency is central to crypto's integrity. So Bitcoin's transparency, where holdings and movements are visible, is one of its core features. So a claim of a massive holding not visible on the chain highlights the difficulty of verifying state actors' activities when wallets are or private keys are unknown. So if it were true, hypothetically, if such a stash were confirmed and the keys could be assessed, it would be the largest concentrations of Bitcoin in the world, comparable to major institutional holders that could have implications for perceived scarcity, supply dynamics, potential political or legal disputes over asset control. However, that remains entirely hypothetical without evidence. Hold on. Who is that? Come here. That's you? Oh. Ah, shit. Sorry, y'all. Shoot. Y'all know I be paranoid. I can't hear when I have these headphones on. I can't hear what's going on in my house.
Yeah. It's like everything canceled out, right?
And I felt a vibration. He dropped something, and then I heard a loud bang, like a knock on the door or something. So it sounded like somebody kicked the door in because the floor shook. So I'm like, hold on. Sorry. That's what happens when you kind of from the hood. You got PTSD.
Yeah.
All right. So if you ain't grow up like I did, you don't get it, and I don't expect you to.
Exactly.
But
This is facts.
Oh, okay. Yeah, this is facts. But yeah. Long story short, y'all, I'm gonna just tell you, Queen's version. Long story short, we took that shit.
Yeah.
We went over there and we took that shit, and it's fucked up, but we went over there and took that shit.
Yeah, nah.
We took that shit from Venezuela. That was part of the plan. We're getting that oil, we're getting that Bitcoin, we're gonna take their minerals, we're gonna take everything we need, we're gonna run that shit, and that's just what it is. That's just what it is. As embarrassing as it is.
Damn. I mean, but that's our MO though. That's our MO. Like, so I'm not. It's like it's fucked up, but it's not surprising. It's not surprising. Not surprising at all. That's right. Just what we do.
Right, like somebody said, not the first, not the last. Yeah. Exactly. Exactly. Greenland too. Yeah, J Bill. Greenland too. Yep.
Yeah. Oh, damn. That's a whole nother conversation.
That's another one. Like how he gave and not trying to take back. You know, Trump, y'all know Trump an Indian giver.
Oh yeah.
It's all anytime America do something for you, it is strings attached. It is strings attached. Yeah, so yeah, I thought that was interesting because I seen somebody in the chat yesterday that brought up the Bitcoin reserve in Venezuela situation. So I was waiting for more clarity because when I had looked into it, no one had any proven facts that they even had that much because it wasn't on the blockchain. So that's why I waited for verifiable information before we went over because I wanted to talk about it yesterday, but I needed a little bit more clarity. But this article was way more just letting you know that this was a rumor and the theories behind it, so that y'all will understand, about what's going on behind it. But I truly think we probably just took their shit and they can't prove it because you can't even prove that they had it. So, if you're gonna steal, this is the way to do it. Like if you're gonna steal from a country, then this is kind of how you should do it because you can't prove nothing. If you can't prove that they even had it, you can't prove a stolen.
Yes, because it's You screwed either
Somebody
way.
said if they can take a
Damn.
country's crypto. Somebody said if they can take a country's crypto and keys by force, and they can take ours. We've been knew that. We've been knew that. Nothing. D has been telling y'all for months. He was one of the first ones bold enough to come on here while it was still controversial to tell y'all it's not decentralized anymore. Crypto is not decentralized.
Nope.
So once it became, since it's not decentralized, yeah, they can take it. They can.
And for real, once the institutions got their hands on Bitcoin years and years ago, that was it. You know what I'm saying?
Over with.
That was it. That was pretty much your only shot to have some type of decentralized system. You know what I'm saying? But then we don't know who created Bitcoin, because that could have been. That's a whole nother conversation. I don't want to open that bag of worms right now, because we'll be online forever.
Right. But shout out to Daniel. He said read the book called Confessions of an Economic Hitman. If you know, you know. Shout out to Daniel for that super chat. And then Michael said. Yeah, Michael said, Trump said years ago, anyone guilty of serious drug and human rights violations would have their assets taken. And I do remember that. Yep. Michael, you're correct. I do remember that. It's how they went over everybody's head and did it. Oh, yeah. Yeah, Urban. We shouldn't be shocked though, bro. This is how America operates, unfortunately. So, you know. All right, so we'll go on to the next article, y'all. We got XRP. Let's talk about it, even though it's kind of dipping right now. It's kind of bad timing for this article, but it did have a good day yesterday, so we'll talk about it. XRP rockets 11% to nearly 240 as Rippling ETF see highest trading volume. I really want to talk about the trading volume from the ETFs, because I'm gonna go ahead and give it y'all. Y'all can call me a maxi. Y'all know I'm not a maxi, but if it was Bitcoin having this type of volume, we would see so much YouTube content about the volume.
Yeah.
Man, we wouldn't hear the end of it if Bitcoin was doing this shit right now. In the ETF world. So XRP is going crazy in the ETF world. So you got to give it its credit. I don't care if you don't like the asset. XRP going crazy in the ETF world.
Nah, it's definitely going crazy. So basically XRP jumped 11% yesterday to about $2.40 because big regulated XRP ETFs in the US are seeing strong inflows in trading volume. And it's been like this for months now. Like this is not nothing new. It's just not that it just happened yesterday. It's been like this for a while. And then fewer XRP are sitting on exchanges, so less sell pressure. And the US regulatory sentiment has improved. That combination can lift prices very quickly, right? So, but how high XRP can go in 2026 depends on big macro regulatory and institutional flows. And they're going to give us a scenario. So basically, why the price popped is, number one, ETF inflows and institutional demand. Spot XRP ETFs recorded $48 million in inflows in one day and over $1 billion total since the launch. ETFs pull money from investors and often buy the underlying token, creating steady demand. Institutional buying is typically larger and more persistent than retail buying. And number two, shrinking exchange supply. Supply shock incoming. Kurt told us on-chain data shows that XRP balances on exchanges at multi-year lows. So fewer tokens on exchanges means less intermediate supply to sell into a rally. So even modest buying can move price more, right? So regulatory sentiment shift. The U.S. regulatory picture for XRP has improved. So fewer legal clouds, the SEC personnel changes, and the talk of market structure legislation. Reduced legal risk attracts institutional capital that previously stayed away. And then on the chart, for my chart bros and girls, the technical breakout momentum. XRP cleared a resistance zone. Cheney said it yesterday, 235. It cleared at 235, right? The breakouts attach momentum traders who buy confirmation, adding short-term fuel. And then market context and rotation. Bitcoin was steady, so speculative money rotated into large cap altcoins like XRP. The rotation amplifies altcoin moves, right? So key things to watch here is going to be the ETF flows, in the coming weeks and months. The XRP on exchange balances. So the rise in balances equal more selling pressure. Regulatory headlines from the SEC, whatever court rulings get, whatever legislation is passed. The Bitcoin direction and macro liquidity, what we just talked about, risk on versus risk off, the order book depth and funding rates and derivatives, and then whether XRP can hold these levels. The scenarios for 2026, though, right? I told her, you know, what's some scenarios? So the bearish scenario is the price range is $80 to $2. That's the most bearish sentiment. The most bullish is $6 to $20. And I've been seeing more and more articles talking about $30, $40, $50. But Kirk came on here and told y'all, man. He came in here and told y'all before the summer it's going to reach quite a bit of a high number.
And while we're talking about the supply and stuff, I want to point out something that T was talking about in the space last week, just to kind of reiterate as well, because I forgot completely about this scenario as well. But he's one of the ones that believes that the escrow that Ripple has, they're gonna have to give up to probably the government, the U.S. government, or get them a piece of it. And once they take that escrow, that's when he's expecting, price to start rising as well. So y'all keep that in mind too, because I know some people like, no, they still got it, blah 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 in the escrow, blah, blah, blah. Like, no, that escrow is probably already accounted for. They just haven't publicly told us yet, but that escrow is definitely gone. The Ripple is, they're just claiming to have it, but I'm sure someone else that belongs to someone else. So keep that in mind as well. So you got the escrow that the government probably gonna end up getting, and then we're gonna have a supply shock. So that's why they said the sky's the limit for XRP. I think it has unlimited potential. So we'll see. But Kurt did come on here and warn y'all. He did. That the timelines may be off, but the facts aren't. So please keep that in mind. Timelines might have been off, but the facts are not.
It ain't gonna be off too much, because look at what's happening.
Numbers don't lie.
Look at what's happening. Look at how institutions are changing their tunes. Look at what Morgan Stanley just did today, right? Filing for ETFs, where they just been on the sidelines for a while. The sentiment overall is changing with the big money, fam, with the big moolah. So don't do yourself a disservice and sit on the sidelines. Oh yeah, shout out to Fit Evo. Silver is over $81. Yep, sure is. Woo. We told y'all. Sorry. We told y'all, fam. We told y'all.
Shout out my man's Rick. Shout out
to Rick for sure.
Shout out
for giving us the history.
Shout out my man.
For giving us the history. We did multiple classes with Rick. Telling like, yeah, you can't get into that. Buy y'all some silver. You can't get gold, get some silver. Silver was wildly cheap when we was talking about it. It was $20, $25 when we was talking about it. It's over $80 an ounce right now. Just saying. Told y'all.
No, silver going crazy. Yikes. I'm trying to read these comments. Let me see. What's up, Dark Ski? What's good?
What's good?
What's up, y'all?
They distracting us with Venezuela. Silver is the play. Shout out to Sid. Yep.
Shout out to Sid. Sid said silver is the play. I'm buying copper. Yep. Copper, one of the ones too. And then Daniel said, lastly, remember XRP and Ripple customer list in 2020 prior to the lawsuit. Banks will get the escrow for ODL. Banks been in. Daniel, thank you so much for bringing that up. Thank you so much.
Shout out to Daniel.
Shout out to Daniel. Silver was $25 when we said that in March. Yeah. $25. It's $81 now. That is crazy. Niggas is up crazy on silver.
Crazy.
Yeah,
it is crazy.
Yeah, for sure. Okay. Nah, for sure. So let's talk about I got another article from Payment. So let's talk about the former OCC chief. He says bank charters help keep crypto compliant. So we got, just a little write up on that real quick. Let's talk about this though, because this is from the OCC. If you don't know who the OCC is, do your homework on the OCC. Let me pull this up real quick. All right, so a former head of the U.S. basically the OCC. He stated that crypto firms obtaining bank charters could help ensure better compliance with regulations and overall financial stability. So, a national bank charter gives institutions a federal banking license that subjects them to oversight by federal regulators. So, the OCC, the FDIC, Federal Reserve. So, according to the former OCC chief, bank charters help set clear expectations for safety, compliance, anti-money laundering, and risk management across activities that resemble traditional banking, which is custody, lending, payments. So crypto companies with charters or similarly federally regulated statuses are more likely to adhere to compliance norms, reducing regulatory friction and uncertainty. So charters can create uniform standards rather than a patchwork of state rules that vary widely. So a long-standing challenge in U.S. crypto regulation. So the article frames bank charters as a mechanism to balance innovation with accountability, especially where stablecoins, custodial services, and lending products overlap with systemic banking functions. So what it likely means. So national bank charters as a compliance bridge. So a federal bank charter puts a crypto business under well-established regulatory frameworks designed for traditional finance. This can help reduce ambiguity around capital requirements, consumer protection, AML or KYC compliance, risk management, and liquidity control. So for a crypto company, a bank charter is effectively a promise of compliance under existing law, which can provide greater institutional confidence, lower regulatory risk, easier access to traditional financial markets. So this idea contrasts with the alternative of fragmented state-by-state rules, which can increase compliance costs and legal uncertainty. So why this matters is because bank charters could become a regulatory pathway. So the suggestion reflects a broader trend where the crypto ecosystem, especially stablecoin issuers, custodians, and lending platforms, is being encouraged to fit into traditional banking frameworks. This is like, don't let that go over your head. I'm gonna say that one more time. The suggestion reflects a broader trend where the crypto ecosystem, especially stablecoin issuers, custodians, and lending platforms, is being encouraged to fit into traditional banking frameworks if they want to scale safely in the US. So this doesn't solve all regulatory challenges, but it creates a credible legal structure that is already understood by institutional investors, offers supervisory clarity, underpins trust for deposit-like products. So institutional adoption is linked to regulatory certainty. Institutional players, banks, asset managers, pension funds are highly sensitive to regulatory risk. A federally chartered crypto entity, so lower legal ambiguity, increases comfort around custody and settlement, may enable crypto access in regulated investment products. So from a market structure perspective, this supports broader institutional flows into digital asset products. So compliance doesn't kill innovation, it reframes it. So arguments that bank charters kill innovation assume that innovation must exist outside norms. So this perspective suggests the opposite. So innovation coexisting within regulatory guardrails can lead to safer consumer products, clear capital requirements, scalable institutional grade platforms. So that in turn reduces the likelihood of enforcement actions, lawsuits, or regulatory rollbacks that actually slow adoption. So this article signals a shift from crypto exceptionalism toward crypto integration with existing financial infrastructure. So bank charters, once seen as burdensome, are increasingly discussed as tools that could help the industry meet regulatory expectations, align with financial stability norms, expand institutional participation. So that's a structural shift in thinking about how crypto companies want to position themselves legally and not just a philosophical debate. So yeah, this was big. This one right here was
that is
big,
huge,
especially for lending. Yeah, the main thing with me is the lending platforms. That's the main thing I'm worried about. So no, this is this definitely will help with clarity though. It will definitely help. It's not gonna solve all the problems, but it definitely contributes.
Damn. Nah. It's moving. This is some good news. It's some good news. I know it was slow going to the new year, but this is right here. Shout out to payments. They be having like some of the best articles, man. They be having some of the best articles.
No, that's payments do for real. Payments do. I should have been checking out payments. Payments be having all the for real. Really good write-ups. And they be putting them out like clockwork too.
Yeah.
So
shout out to payments. Shout out to the journalists that's over there putting in work.
Yep,
I did.
yep.
I did. Your boy. I did have something about Arthur Hayes. He was talking about why the oil mattered, why Venezuela oil matters for Bitcoin. He did come out with a tweet. I'm gonna put it in the there. He did have a tweet in this article. So basically, Arthur Hayes, you know what I'm saying, black dude that, you know, he's very vocal, you know what I'm saying, about crypto and where it's going. He published his latest essay arguing that the U.S. takeover of Venezuela oil isn't moral news, but rather focused on the country's economy, and said what matters for Bitcoin and markets, he argues, is how political leaders manage the economy, credit, and inflation. And then he put a picture of the Pepe joint with Trump's face on the eyeglasses on the on the what's his name, the Venezuelan president, well, at least the former president or whatever. So he said Suavemente is an essay explains why Pax Americana's colonization of Venezuela for its oil means it's time for Bitcoin to pump. So I guess he's thinking Bitcoin is going to pump because of this shit.
Okay. Of course he thinks Bitcoin's
Right.
Good old author. Good old author.
So
Good old author.
And then he said, he added that the U.S. President Donald Trump is strongly focused on keeping the economy strong and inflation control, which are essential for future elections hitting at the 2026 midterms and the 2028 election. And then according to Hayes, the average voter cares most about how wealthy or financially secure they feel when they cast their ballot. That feeling depends on nominal GDP, credit availability, and the price of gasoline. So is Trump going to be able to control that going into midterms? That's a question. Ooh. That's a question.
I don't know. I don't know. Oh, this is funny.
Yeah.
Wow. Nah, they wilding out. Nah, I don't know. I don't know. I got to see how Trump moving, gang. I got to see how this shit plays out in the next couple weeks. On top of that, you know, we got to make sure we don't have another government shutdown. We over here taking over other countries. We ain't got our shit together. Well, what the fuck are we doing? We on the brink of another shutdown at the end of the month. If they don't get that shit, I'm sure they'll get it together though, because I think we done with shutdowns. But who knows?
Maybe that might be another excuse for them to do whatever they need to do, shit like that. But hopefully not, because we still like about 3 weeks away from that, because that's like at the end of the month, right? That's like in the 30th.
Yeah, that's at the end of the month, and they just ain't talking about it. It's just straight up Venezuela. That's how you know it's a distraction too. So we got to see how that even plays out. It's like it's a lot going on right now. That's why I'm like, I don't know what the hell is about to go down, gang. I don't know. I just know something about that. But we had been telling y'all something was brewing. You can feel that shit.
Something definitely
too quiet.
Silver at 82 now. 82. Okay, let's go to 100.
We got somebody in the comments. Somebody in the comments said Tether and Bitcoin are in trouble being used for invading oil sanctions and bioterrorism. Oh shit. You know, it wouldn't shock me whatsoever if they, you know, USDT get in trouble with Bitcoin. So but yeah, y'all, I'm gonna play this real quick. So we got to ad. I meant to do an ad break. We got to add for the DeFi Patreon. So I'm gonna just play this real quick so y'all can kind of see what's going on in there.
Okay, welcome back to BlockNation DeFi. Today we're going to go over the top 5 tokenized stocks.
So there you go. So yeah, let me go back. Boom. All right. So yeah, that's what's going on right now in the DeFi platform that we got over there on the Patreon. Just going over the top 5 DeFi. I'm sorry, I done clicked it on accident. Oh no, I didn't. Okay, but yeah, that's what we're going over right now. So just kind of wanted to share that with y'all. I want to make sure we start showing these little ads. Ah, shit.
Okay, welcome back to BlockNation DeFi. Today we're going to go over the top 5.
Like, oh my God, my shit lagging. I was trying to click to not do that. Sorry. But yeah, the top 5 DeFi tokenized platforms is what we going over in the Patreon right now. So just kind of wanted to share that with y'all. But also, speaking of the DeFi Patreon, we do got that Flare Network class coming up. Y'all might want to make sure y'all tapped in on that one. The Flare Network Masterclass is coming up on January 11th. This is a huge class, especially if you're an XRP holder. You need to make sure you weighing out all your options other than selling. Okay, you need to make sure you weigh out all your options. The Flare Network class is going to show you how to, tell you what Flare is, why Flare is just not just another L1, how Flare brings real world assets on chain, and why Flare is designed for yield and not speculation. You want to earn yield on your assets. You want to borrow against your assets. If you're gonna be paying taxes and you're probably gonna go broke because you're not earning no money on that money. So you want to make sure you deploy your XRP where it needs to be. In the safest place to deploy it, especially this year with DeFi. DeFi gonna have a big year. It should be getting regulated. So yeah, I definitely would make sure I'm in that Flare Network class on January 11th. It's gonna be at 6 p.m. It's gonna be a 2-hour class. So make sure y'all tapped in because I can't emphasize that enough, especially for XRP holders. Especially for XRP holders.
No, it's a fact. It's a fact, man.
Trying to take this thing is really frozen. Stuff is lagging. Yeah, man, I can just in Vegas is ass. Like you really don't have no options here. Like,
well, it ain't just not just Vegas. It's everywhere. It's everywhere. Everybody.
Yeah, but it's but Vegas is bad because of the way the houses are built, because of what it's built off of.
So it's an infrastructure issue.
Yeah, because everything is made out of stone, whatever this shit is called. It's made out of stone. But yeah, y'all, sorry about that. But yeah, other than that, man, hope to see y'all in that Flare masterclass coming up. And then hopefully you guys are in the BlockNation community. If you have not joined the Patreon, make sure you in that BlockNation community Patreon, that DeFi Patreon. But other than that, y'all, we'll be back on later. We got some more updates. Other than that, we'll keep an eye on these prices. It's looking like we're taking a little dump, so I'll just go over them a little bit before we hop off. But yeah, XRP sitting at 225. Bitcoin's at 91,000, almost 92,000. ETH is at 3,200. You got Cardano at 40 cents. Let's see, where is Stellar? 23 cents. So yeah, Sui's at $1.85. So yeah, look like we kind of consolidate and then a slight little dip or whatever. So we'll see what happens. We'll keep an eye on the market. But other than that, man, see y'all in that Patreon. Make sure y'all like the live before you head out on YouTube. And we appreciate y'all. We'll see y'all. Yeah, and we'll see y'all this evening for sure.
All right,
y'all.